Hello, investors. Welcome to the Macro Real Estate Investing Show. I'm your host, George Gammon, and this is the show where we look at the headlines from the world of macroeconomics to determine how the news applies to real estate investing. My goal is to help you stay informed, make better decisions, and of course, make more money. So let's dive right into it, guys. I pulled up this article from the Wall Street Journal, and it really helps explain a lot of the misconceptions that I think are out there. Let me back up just a little bit. The other day I was listening to one of my favorite real estate investing podcasts, and I also watched a couple YouTube videos and I believe a podcast on macro or finance. But regardless, I heard many professionals that are and people that are extremely smart talking about how these new statistics have come out that the rate of homeowners in the United States that own their home outright, so have no mortgage, is almost at an all-time high, and it's increased something like 11 or 12% just in the last 4 or 5 years. And they attributed this to a great economy and to homeowners now having the money to pay down their debt and the savings rate going up, and none of which I think is actually true. I think what's going on here, and it was one of those podcasts that you listen to where you're kind of just you're screaming into your headphones because it's like you know the answer and you want the people to discuss it, but they just don't. So I thought, shoot, we got to do a video on this. So more to the point, I think the reason you're seeing these numbers, the reason you're seeing an extremely high rate of homeowners in the United States who actually have 100% equity in their home, in other words, do not have a mortgage, is because there's so many more homeowners in the United States that aren't owner occupants, that are hedge funds, that are private equity funds. Just think about this. Prior to 2011 or 12, the majority of homeowners were either just ma and pa real estate investors, or they were just, of course, owner occupants. But then what happened in 2011 and 2012 is these massive hedge funds and private equity funds with billions and billions of dollars at their disposal came in and started buying rental properties. Why? Because the Federal Reserve took interest rates down to literally zero. So that brought the return down on bonds and every other asset class down below, let's say, 5%. So they were starving for yield. So they came up with a brilliant idea of trying to buy pools of rental properties. And when I mean pools, I mean pools of literally thousands of rental properties, and get these things managed, get them fixed up, and rent them out to get a 7 or 8% yield. And then what a lot of them did is took these pools of cash flow and then securitized them and then sold them into the open market at a profit, because since the going rate in the open market on bonds or something like that was down, let's say 3 or 4%, the premium that you could get from the cash flow on these rental properties made those securities very attractive, and they were able to collateralize them and make a lot of money. And then, of course, some of them, more specifically the private equity funds, held them in portfolios, which they still have. And whenever you hear about the supply being very low, it is true that the supply is low because the construction is not there, but it's also true because no one's selling. Why would the private equity funds, why would these hedge funds, why would they sell in an environment where now the Federal Reserve will most likely be lowering rates again and doing quantitative easing? They're trying to ban cash, which means that they're trying to set up the platform for potentially negative interest rates in the future. So if you're a hedge fund that's got $2 billion that's performing and throwing off a 6 or 7% yield, why are you going to sell that in an environment like this? The bottom line is you're not. So my main point was that these guys are getting it wrong. They think that the fact that there's more equity in homes now, that more homeowners have all cash, have 100% equity, fewer homeowners have mortgages as a result of all these other things. But it's just not. It's just because you've had so many of these private equity funds and hedge funds go in and just buy them outright, just buy all these properties in cash. So let's look at this Wall Street Journal article that I think really illustrates what I'm talking about. So investors are buying more of the U.S. housing market than ever before. Just replace investors with cash buyers. And they're talking about how this poses a challenge for millennials and first-time home buyers because most of the properties that these cash buyers, investors, private equity funds are purchasing are starter homes because that's where you get the great returns on the rentals. So going down here, I mean, some of these stats that really popped out to me: big private equity firms, real estate speculators, and others that buy properties comprised more than 11% of U.S. home purchases in 2018. Let's think about this. That is 100% of the home purchases, not just the percentage of starter homes, right? So if the amount of starter homes, let's say was, let's just say it was 10%, and they're buying up 11% of that, you can see how much, well, excuse me, let's say that they're buying up 11% of the total market, and that 11% is, and let's say 20% is starter homes. Well, if they're buying up 11% of that, 50 or 60% of all starter homes could be purchased or could have been purchased in 2018 by hedge funds or private equity. And in my experience, I don't think that's too far off. I remember when I first started getting in the game in 2012. I was doing it in the Midwest in 2012, 13, 14. And toward the end there, before I started diversifying outside of the country, I was getting almost every single property. I was getting bid out by private equity funds, by hedge funds. And I've seen it everywhere, even in properties that I've rented for family members in Arizona. Almost every property that I rented there for a family member was we signed up with a certain property management company, and 6 months later the property management company changes, and you're like, oh, well, what happened? Oh, well, a private equity fund bought out every single property that ma and pa property management company ran in the Phoenix area or in the Tucson area. So this is real. And these numbers, I don't even know if the numbers outlined in this article are really 100% reflective of what's actually going on here. So this is what I wanted to discuss today. And this is what I really wanted to get you thinking about. So when you're reading headlines in the future about supply issues or about there being so few homes for sale, just think about it in the terms of private equity, and then think about what it would take for these private equity firms or these hedge funds to actually sell. So what that would require is the opposite of what happened in the beginning that prompted them to buy. And that was that interest rates fell all the way down and the interest rates became artificially low. Well, if interest rates go back up to where they normalize, let's say at 5, 6, 7%, that is going to give these hedge funds a choice. Okay, now do I keep this rental portfolio that's kind of a pain in the ass to manage, or do I flip this over into bonds where I can get a 6 or 7% risk-free return? Well, then what you're going to see are housing prices, especially in that segment, really having a lot of downward pressure because interest rates would be going up, which means monthly payments would be going up, which means affordability is going down. So that puts downward pressure on home prices. In addition to that, you'd have a lot of supply coming out of the market because all these hedge funds and private equity funds who have been, in my opinion, the majority of the buyers in the last 8 years, they would all be liquidating and all that supply would be coming onto the market. So I'm not saying that's going to happen, but I'm saying that's something that you should be cognizant of and that you should really pay attention to. So that is the episode today. And if you guys love the content, if you guys are just trying to get to the game of real estate, or if you're an intermediate or professional and you just want to get better, make sure that you hit the subscribe button and hit the notification bell, because I'm going to have videos like this come out every Monday, Wednesday, Friday. On Tuesday and Thursday, I'm going to have videos that come out that are more instructional. And every single Wednesday, I'm going to have a vlog come out that really follows me in my day-to-day life as a real estate investor. So you can get some entertainment value out of that and hopefully learn a lot as well. So hit the subscribe button, hit the like button, turn on the notification bell. And if you guys have any questions, make sure you leave them in the comments. I will try to answer them as quickly as I can, and we'll see you guys on the next video.